Like I think we'll have no big whammies. I think we'll get a positive electoral outcome. I think we'll get continued easing and stimulus, and so I think we'll close the year at new all-time highs, and then I think we'll run from there in 2025. So I wouldn't be surprised if my base case is we're over $80,000. I wouldn't be surprised if we were significantly over $80,000 by the end of the year.
At the start of 2024, Bitcoin was trading at significantly lower levels. However, Hougan maintains that reaching $80,000 remains possible, contingent upon several factors. He explains that market uncertainty could arise from political developments, particularly a Democratic sweep in the U.S. elections. Such an outcome could lead to elevated volatility and reduce Bitcoin's chances of hitting the target. However, any other electoral outcome would create a favorable environment for Bitcoin's growth. Hougan also highlights the importance of continued economic stimulus and rate cuts. With the market expecting further easing from central banks, including the U.S. Federal Reserve and China's stimulus efforts, Bitcoin could benefit from these tailwinds. However, the market's disappointment in the absence of such support could derail Bitcoin's trajectory toward new all-time highs.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
At the start of this year, Bitcoin was trading a lot lower than it is today. We said it would hit $80,000 this year, and so I wanted to update. I think that's still true, but it's true only if a certain number of things happen. And I think the key things that have to happen is we have to see not a Democratic sweep, right? We talked about this earlier. We can accept any other electoral outcome, but a Democratic sweep would raise the level of uncertainty so much that I think there's no chance we would get to $80,000. So that's a big piece of the puzzle. We need to see continued economic stimulus and rate cutting. Like I think the market expects 2 more rate cuts. I think it expects more stimulus from China. Maybe it's starting to expect Europe to try to do something to revive its economy. And it will be disappointed if we don't get that. And I think if it's disappointed, that lowers the probability of getting to new all-time highs. And then the third thing is we need like no whammies. I feel like we had a few whammies this summer. Like
it's been a tough summer.
Oh man, every time we'd be going up, we'd be like, oh, the government's going to sell its Bitcoin, or oh, now Mt. Gox is releasing its Bitcoin, or so like we need 3 months. Somebody else said on Twitter, that's asking a lot in crypto. I agree with that. Yeah. It's asking a lot, but just no big whammies. But I think all those things will happen. Like I think we'll have no big whammies. I think we'll get a positive electoral outcome. I think we'll get continued easing and stimulus, and so I think we'll close the year at new all-time highs, and then I think we'll run from there in 2025. So I wouldn't be surprised if my base case is we're over $80,000. I wouldn't be surprised if we were significantly over $80,000 by the end of the year. I mean, the first thing to remind traditional investors is that like Bitcoin's not like a virus. If you add 1% Bitcoin to your portfolio, you can lose 1% of your money. It doesn't infect the other 99%. Nothing terrible happens. You buy it and you wake up the next morning and you're just the same as you always were. We love this study. It's looking at what happens when you add 1, 2.5, 5% Bitcoin to a 60-40 stock and bond portfolio. And I think this really teaches you an important thing. So I would look at the 2.5% line. That's sort of the average Bitwise client allocation. And what you see here is that adding just 2.5% Bitcoin to a traditional portfolio significantly boosts your overall return, right? 50% over this time period. It boosts it multiple percents over a 1 year or 3 year period. And then the important thing is it does that without increasing the standard deviation, right? Your standard deviation goes from 10.25 to 10.58. And the reason for that is something that everyone knows, which is Bitcoin has low correlations to stocks and bonds. And when you put a low correlated asset and rebalance it in a portfolio, it leads to higher risk-adjusted returns with no real impact on volatility. You can see here, the correlations we have from our quarterly report. The US equity correlation is below 0.5, which means it's still low. That's actually elevated from where it usually is. It's usually below 0.25. But even at 0.49, it's still so much lower than the correlation between most assets. And it's simply additive to portfolios. Like, what drives Bitcoin? It's education, it's the passage of time, it's regulation, it's fiat debasement. What drives stocks? It's economic growth, it's taxation, it's technology breakthroughs, right? These are just different things. And so different drivers lead to different results, lead to different correlations. And again, assets can be as volatile as you want. And Bitcoin is pretty volatile. It's as volatile as like the Mag 7. It's pretty volatile. But assets can be as volatile as you want. But if they're not correlated and you rebalance, you get this beneficial effect. Now, we do see, and we've done a study on this, that when you get above a 5% allocation to Bitcoin, it starts significantly impacting your maximum drawdown in your portfolio. It becomes the driver of that maximum drawdown. And so we think there's behavioral risk above 5%. But at 2.5%, it's like Cholula for your food. If you add a little bit, it makes it taste better. And no one's just drinking a bottle of Cholula. The thing about gold does the mental model to compare Bitcoin and gold is that they're both portfolio diversifiers, but they have different effects. So Bitcoin increases your return historically without increasing your volatility. Gold lowers your volatility without lowering your return. So Bitcoin, more return, same volatility. Gold, same return, less volatility. It's actually a pretty different effect.
Totally.
Right? I think a lot of people lump them together, but it's a pretty different effect. One is more aggressive and one is more defensive. The other difference, and this is a huge one, is you have to allocate so much to gold for it really to matter, right? You need like a 10 or 20% allocation. It just doesn't have the juice. It has very small impacts. And I think that makes Bitcoin that much more valuable, right? You can keep 98% of your investments in traditional stocks and bonds, which are great long-term investments, and just have a 2% allocation to Bitcoin. And you have a bigger impact than if you had 20% of your portfolio in gold, and then you're giving up all that upside in the stock market. So I think those are the two important things to think about: the directionality of the impact and then the scale of the impact. Bitcoin's just much more efficient.
Hougan emphasizes that the ultimate goal of ETF issuers is to bring more investors into the crypto market. This involves not only education, but also the development of products that address investors' concerns. For instance, many potential investors are hesitant to enter the market due to fears of large drawdowns. Products like covered call ETF or strategies that buffer against volatility could alleviate these concerns, making crypto more appealing to a broader audience. By designing innovative products that manage risk effectively, ETF providers can encourage new investors to enter the space or increase their exposure. Hougan believes that these developments will be crucial in driving adoption over the next few years.
I think there are two groups of marginal buyers that we're seeing as very real adopters. One is retail investors. That one's a little bit surprising because it is so large in size, all right? Something like 80% of those assets are coming from retail self-directed investors or smaller institutional investors. And that's probably exceeded my expectation. I don't think that's all rotation. The $20 billion is net of the money that's flowed out of GBTC. So that's net of that money. So that's net new investment. I think that's a lot of people with retirement accounts that couldn't access crypto, adding exposure in that space. And it's honestly just a lot of people for whom the ETF is the easy button. I know those of us in crypto thinks it's completely normal and easy to have a wallet or have a Coinbase account and buy Bitcoin. But for my father or my uncle or whatever, that's not what they do. They have a Schwab account and now they can access Bitcoin. So I think that's net new. The other place that's really taken off is independent financial advisors and family offices. So not broker-dealers, not Morgan Stanley, not UBS, not Wells Fargo, but independent RIAs, registered investment advisors, as we call them, That's Bitwise's core bread and butter. We talk to them every day, and you've seen enormous growth there. Even if you just look at those flows, it's the most successful ETF launch of all time. So RIAs and retail have been the big buyers. Retail has been a little bit surprising in just how fast it's been, but I'm not surprised that both have succeeded. The ETFs are actually just a great product for buying Bitcoin. For somehow underestimating the amount of change that could take place in a year from a regulatory perspective. It's like we didn't learn the lesson of this year, that you can go from not having an ETF and it being impossible to ETFs being one of the most important things in Bitcoin and one of the most important things in ETH, and something we talk about all the time. And they don't imagine that we could make that same leap again next year. But I actually think that's the case. I think next year we could be talking about a wide array of ETFs on a wide variety of assets and sort of a 10xing of the ETF ecosystem. So that's one thing that I think people are generally missing. In terms of specific strategies, there are a lot that I'm excited about. So I am really excited about index-based products. You know, Bitwise runs the largest crypto index fund in the world. For most investors, I think an index-based product is probably their best choice. They just want exposure to crypto. If you look in the traditional ETF market, like, you know, index products are overwhelmingly the way people gain exposure to the market. So I'm very excited about what index products could do in terms of bringing in a broad array of investors. I also think there are a lot of interesting things you can do from a strategy perspective, whether it's momentum strategies that sort of reduce risk for people, or option overlay strategies that reduce risk for people. I think there are a lot of people on the sidelines of crypto because they're worried about the 70% drawdown. And there are various ways that you can mitigate that from a strategy perspective.
Like a covered call strategy and that sort of idea.
Like a covered call strategy, or even a long flat strategy, or a strategy that's buffered. And you see that in the traditional ETF market with all of those options. And I think you'll see that in the crypto market. And again, the big thing that will do is move people from the sidelines into this market. That's ultimately what all of us are trying to do. What all the ETF issuers, I think, are trying to do is take people who aren't investing and help them invest, or take people who are investing a little and help them invest more. And you do that through education, but you also do it through product design by coming up with products that do that kind of risk mitigation in interesting ways. So I'm really excited about that in the next year or two.
Matt Hougan expresses optimism about Bitcoin's future, both as a store of value and a high-performing asset in diversified portfolios. While external factors such as political developments, monetary policy, and market disruptions may impact Bitcoin's path, Hougan is confident that the market will adapt and thrive. He believes the growing adoption of Bitcoin ETF, coupled with innovative financial products, will play a pivotal role in driving the next wave of investment. As we move into 2025, Hougan sees a broader ETF ecosystem emerging, covering a wide array of crypto assets. This evolution will make it easier for investors to access digital assets and could significantly accelerate Bitcoin's journey toward higher valuations. With the right conditions in place, Hougan's forecast of Bitcoin surpassing $80,000 remains within reach, setting the stage for an exciting year ahead.
Please like and subscribe my channel.